Hello everyone and welcome to TTT Markets. In this video, I'm going to show you how to use interest rates in FX to get a trading bias. Without any other delay, let me go straight to the chart. So here is the Euro USD chart. Let me get rid of the ads. And as you can see, I have a daily Euro USD. Euro has been moving up since about the beginning of the year, February 25, and the last couple of months from early October up until now, it's almost the end of November now, the market has been moving sideways. We have this kind of price action, and as you can see, I have drawn some trend lines and I'm looking to do business at the appropriate levels. But allow me to ask this: why is Euro moving up like this now? Why do we have this move? Why didn't this trend start here? Why didn't it start here? Why in this area? Why did we have a sideways market? Why it moved down in the first place from almost 120 all the way down to 1.01, and then from 1 it went again all the way close to 118, 119. Why is this happening? So allow me to show you how to use macro fundamental indicators, how to use interest rates in order to get a bias in your trading. So no matter what kind of chart you have, if it is a 4-hour, if it is a daily, although I personally prefer 4-hour and daily, no matter what kind of strategy you use, whether it is a mean reversion or a momentum, you do use macro fundamentals to get a bias. And most of the time, but not always, please keep this in mind, most of the time, but not always, interest rate differentials would be extremely important. And now let me show you. So here is trading view. I have my chart. This is the daily bars. And I go here to the plus sign, I click, and I will choose GE10Y. Apologies, made a mistake, DE10Y. So this is the 10-year German yield. And I hover my mouse over this and I choose new price scale. And what do you see here? We have the German yield. Right now, we don't see any kind of correlation. I don't think anyone can look at the German yield and draw a conclusion about the Euro USD. Yes, the German yields have been moving up and Euro has been moving up, but we can't say this move seems to be correlated. We cannot draw significant information from this. What has been missing? What has been missing is one critical thing, that Euro USD, it is not one currency. We used to describe this as the euro, but it is not the euro. It's euro versus USD. So this is extremely important. It's two currencies. It's the euro versus the USD. So we have to go back here, delete this. So what we do is we click again the plus sign, we go over here, we type DE10Y minus US10Y. So this is the differential between the German yield versus the 10-year US yield. And you click new price scale. And now this is better, isn't it? Now you can see the differential between the German versus the US yields against the euro. And do you see what is happening? You see that the differential is moving up. What happens to the euro? The euro is moving up. So my bias says that the euro should appreciate in this case. Then it tops and starts moving lower. Can you see how closely correlated this is? The euro starts moving lower together with the differentials. But allow me to tell you something that is very important. It's the differentials that is moving the currency, not the other way around. The differential is not moving lower because the euro is turning lower. No, the opposite happens. It's the differential that is moving lower, and then the euro follows. Please pay attention that this correlation is not perfect. This means that this will not happen all the time. Why? Because there are also other factors affecting the currency. There could be other factors. There could be growth considerations. There could be geopolitical events. There could be concerns about future monetary policy. So the market might be discounting what will happen next in the future. There could be other political reasons. So all this play a role to decide the direction of the currency. But most of the time, the currency will follow the path of interest rate differentials. So you see here the interest rate differential in this area. Let me move this so you can see better. Consolidated, the euro consolidated, it started moving up, the euro started moving up, and now the differential is still in favor of the euro. You can see it is moving up, not with the same momentum, so the momentum has calmed down a little bit, but the bias is to the upside. Let me hide this, and now we have the bias. What does this mean for us practically when you trade the euro? So we have the currency, we know the interest rate differential is favoring the euro. So what we do is we buy on pullbacks. Have you heard strategies where you buy at support, you buy at the trend line, you buy at the moving average? You can use whatever you want, but the bias is to the upside. So what we do is we buy at pullbacks. We buy at pullbacks, and you can see this keeps going. So we keep doing this until it stops working. And although the bias still points to the upside, and you can see this is the reason why we were buying here at support and we weren't selling the breakout, because the bias is to the upside. The interest rate differential is still favoring the euro. So we buy here 115.20, we bought, we took profits here. Now we have a trend line, so this could be a small technical trade, but the bias is to the upside. If something happens, then we will see in the differentials are going to turn. If this happens, maybe this is why the price has turned. Why has the price turned? And we have a series of lower highs and lower lows. Again, the markets are not absolute machines. I mean, they are not telling us exactly what the price should be. Because yes, from one hand, we have numbers and we can manipulate the numbers, we can do different calculations, but at the same time, it's psychology. The market is discounting what is going to happen next. So you can use this in order to think, what is the narrative? So far, the narrative was favoring a strong euro because the rate differential was strongly in favor of the euro. Now this is not happening so much. Why? Well, this is because we had expectations that the Fed will not cut interest rates in December. They are going to be on hold and perhaps they are going to cut later. This is why the market, can you see how from a strong trend up, it moved sideways, and market participants are probably taking profits, are locking in some profits or using stops to get out, or the buyers are not so active. This is why this is happening. And this is happening all the time. You can use macro indicators to understand what the bias is, what the normal trend or the normal trade should be, but we can use again the rate differentials to understand not only what the bias is, what the macro trade is right here. Let me do this so you can see better. But we can use this to understand what is the narrative. Is something changing in the narrative? For example, I see here that even the rate differential is the blue line. Let me do this so you can see it has changed. It is moving sideways. As soon as it moved sideways, the same thing is happening with the euro. Well, this is happening because, again, expectations about the future. The expectations have changed. So we are moving in a regime that, let's say, expectations are balanced. What does this mean for you practically? It means that the market will probably move to a ranging condition, to a ranging regime, sideways. What does this mean again for you practically? It means do not use momentum strategies. Do not use trend following strategies. Sell the highs, buy the lows, support, resistance, Bollinger Bands, the RSI. You know, you have to use the right tool at the right time. So in this case, that would be more appropriate. And can you see what I have done? I have used something that is available on TradingView. It's free, I don't pay for this, but I can use this to understand what I should be doing next. What is the direction? What is the bias? What is the structure of the market? The last thing I will tell you is that this is not working all the time. It works most of the time. Interest rate differential is an extremely significant factor, but there are other factors that are affecting exchange rates. But perhaps this is something we can discuss in another video. Thank you for watching. I hope you have found this very useful. And in this video, we showed you how to use interest rates in FX to build a trading bias. I'm Fotis Papatheophanos. Thank you for watching. I'm going to see you in the next video.